Hello, everyone. Top of the morning from this part of the world, and depending on whichever time zone you are tuning in from, good afternoon and good evening to you. Well, as usual, I'm very excited to welcome you to our first edition on the Forex Morning Mastery for this week. And it promises to be an exciting one as we have very interesting developments in the financial landscape, which we will be taking into consideration, deliberating on, and of course, using it to guide our trading decisions for this week. And hope you all had a wonderful weekend out there. My own was very, very short, but I hope you also had a splendid one. And how well did you prepare for this week? For this week, we're going to be monitoring about three financial instruments, which actually I shared a couple of videos during the course of the weekend, which gives you an insight into what I will be looking at for this week. So this week we are going to be looking at the US oil spot. We are also going to be looking at the GBPUSD. Remember, I did a poll on my Telegram platform. Unfortunately, I forgot to share the same on the YouTube channel. But based on the outcome of the poll we received, the GBP USD was much more preferred over the USD JPY and the Euro USD. So as a result of this, we are going to be taking on the GBP USD today. And finally, my favorite asset amongst them all, which is the XAUUSD. And before I go further, I would like to appreciate newcomers who are in the house. For those of you who are joining us for the first time, you're highly welcome on board, and I do know you will be wondering what this is all about. What is it that we really do here on the Forex Morning Mastery? Well, the Forex Morning Mastery was born out of the necessity to do follow-up details on the weekend videos I share, and on Mondays, Wednesdays, and Friday, as technical traders, we usually come here together to engage and do follow-ups on these assets, and of course see how we can manage our existing positions while we also strategically position ourselves for the next move ahead of both the London and the New York session. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use it to guide your own trading strategies and analytical approach. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, we shall be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And you know how we do it in this community, by checking on the economic calendar. We tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and obviously timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, for today, Monday, April 22nd, we do not have any high impactful event. I even went on further to include the mid-tier economic features, but still, we do not have anything from both the United States and the United Kingdom. So, the dynamics today is going to be guided by the US dollar market, definitely, and of course we shall be relying on our technical skills to identify potential trading opportunities for today. And for those of you who are with me on both my TradingView and Telegram platform, you must have gotten an update as to how we are going to be managing our positions today. But during the live session, we will be expatiating further on that to have a deeper insight into what is really going on in the market after taking into consideration the fundamental factors and of course the technical aspects of the market. So I encourage you to stay tuned in. We have very simple and interesting trading setup that will be our guiding light for this week. So with that being said, here we shall be diving right into the first asset on our watch list for today. And as usual, the first asset we are going to be looking at today is going to be the US oil spot. Now, on the US oil spot, interestingly enough, the week has started on a strong bearish momentum, and the recent decline in the crude oil prices in the last couple of days can be attributed to the easing geopolitical tensions in the Middle East. Now, there are reports indicating that there has been a de-escalation of conflict between Israel and Iran, which obviously has contributed to the sentiment in the market. Now, if you remember last week and a couple of weeks ago, we were talking about geopolitical tension and concerns as regards to oil disruption from this particular area. At the beginning of this month, we had the Israeli attacking the Iranian embassy in Syria, and of course after this attack it was more of concerns as regards to the retaliation by the Iranians, though they retaliated about last week, and of course the Israelis also retaliated again last week as well. And at the end of the day, the Iranians have downplayed that attack as it wasn't a significant one. It didn't cause any major damage. So as a result of this, the concerns have eased. And you know how Iran is one of the major players in the global oil market. They produce at least 3 million barrels per day, and this was a concern back then that we may be seeing concerns as regards to oil disruption. But as it is right now, it appears the tension has reduced. And another thing that could also affect this asset today, following the Iranian attack, we learned that the U.S. House is planning to sanction Iran's oil sector, which was reported by Bloomberg this morning. And this may introduce potential supply constraints that could counterbalance geopolitical factors and exert upward pressure on oil prices. So we are going to be taking into consideration the possibilities that price action could rise this week following this recent development, and the extent of these sanctions and the response of other oil producing nations will play a significant role in determining the impact on the asset. So I'm of the opinion that market participants will like to exercise patience at least for the first couple of days of this week to digest the implication of this potential sanction. Then moreover, the expansion of secondary sanction to cover transactions involving Chinese financial institutions and sanction Iranian banks could further influence the crude oil market dynamics as well. Then another thing that could influence the U.S. crude oil market is the recent reassessment of federal interest rate decision. And remember, we've been talking about potential interest rate cuts since the later part of last year, and it was intended that there will likely be 3 interest rate cuts for this year. However, based on the recent data coming in from the United States, we've seen that the United States is very resilient at this point. And of course, the CPI data and inflationary data coming in also shows that inflation is sticky in the United States. And this may further incite potential prolongation of higher interest rates due to concerns about persistent inflation, which obviously will strengthen the US dollar, making oil much more expensive for countries using other currencies to buy this asset. And obviously, this could also dampen global demand and contribute to lower prices due to lack of demand. So all of these factors will be influencing the market. So we can see that we are in a limbo right now where market participants need to weigh the implication of these factors before making any decisions. We have a scenario where the potential of price dropping further to the downside seems to outweigh the potential of price action continuing to the upside. Now, to be able to understand this in from technical standpoint, we need to look at the chart and using the historical data we find on the chart to understand how the market participants in this environment are reacting to these latest developments in the market. Now, to start with, we will be moving into the higher time frame, and I have something I would like to share with you, though we will be buttressing this on the 4 hours time frame, but I just needed to show you something on the daily time frame, which is going to be playing a significant role in this particular market. Now, after taking into consideration the character of price action since the beginning of this year, you will see that the market has been bullish, and after connecting the series of higher lows, here we have an ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying. So I needed to share this with you right here on the daily time frame. Now, scaling down into the 4 hours time frame, we begin to see things more clearly, where we were able to identify the key levels and of course structures that will be guiding our trading decisions for this week. Now, price is still sitting above the ascending trend line, as you will see here, and in fact I have the $81 area serving as my key level for this week. And if you look at this $81 area, you will see how it had played a significant role in determining the direction of price action since the mid-month of March. That's about 4 to 5 weeks of historical data here. And look at how at every point in time price comes into the key level at the $81 area. We've seen how it has become difficult for sellers to follow through to the downside, making this area between the $81 level and the $80 area to be a robust demand zone to take into consideration while we prepare ourselves for any trading opportunities around this area. And you know how we use our key levels and of course demand zone. We will only consider buying as long as price remains above the structure, looking out for patterns like double bottom structures, head and shoulder patterns, or even falling wedge to join the uptrend move. However, if price action breaks down these structures, definitely this will welcome selling opportunities. Now, another thing I would like to share with you here is the emergence of what looks like an uptrend continuation pattern in the form of a flag pattern. Now, to give a visual representation of what I'm talking about here, we have an impulsive move all the way into the $88 area, and you will see that since price tested that high, price transitioned into what was looking like a flag pattern, which technically and from a theoretical standpoint is considered to be an uptrend continuation pattern, where the breakout of the resistant line of that range will be all we need to continue the uptrend. However, during the later part of last week, we saw a breakdown of the support line of the flag channel, which was as a result of the volatility from the Israeli attack on Iranian territory, which breached the support line a couple of times, and then we saw a whipsaw, as we see here, price action juxtaposing between the 84 and the $81 area. Now there is something I would like to call our attention to around this area, which is the reaction of the candlestick structures around that $81 area. Now if you look at the structure closely, you will see that at every point in time price comes into that area, we saw sharp rejections of that level, further emphasizing the strength of the buyers around this area. So we are at a very crucial juncture in this market. We are depending on how market participant reacts to this level will determine if we are going to be buying or selling. Now remember what I said earlier, price action is sitting right above the $81 level, above the demand zone, and of course the ascending trend line, which is a structure that will be supporting buying opportunities. However, if price action breaks down these structures, then definitely we want to start considering selling. Now, our center of focus for this week, or let me say for today, is going to be around that $81 area, where we want to see how market participants will be reacting to the structure during the early hours of this week. Now, to have a better perspective into this, we shall be scaling down into the 1 hour time frame, and right here on the 1 hour time frame, this was what I was able to come up with this morning. Now let me zoom in very well so that we can see things clearly, and you will see that the new week started with a strong bearish momentum, which I said earlier may be attributed to the easing geopolitical tension in the Middle East as market participants try to digest the implication of the structure. So the market started, excuse me please, so the market started the week around the $81.80 level, and since then it has been dropping to the downside. In fact, it dropped with approximately $1 so far this morning, and you will see as soon as price got into the $80.60 level, we have been noticing some buy pressure in the last couple of hours. Now remember that the $80.60 level is right within that demand zone we identified on the 4 hours time frame. Now the question here is, how are we going to see buy pressure resume here again to incite the uptrend continuation, or price is likely going to be breaking down this $80.60 level to capitalize on selling opportunities? So our center of focus for this morning is going to be between the $81.80 level and the $80.60 area, where depending on the direction of the breakout will decide what our next line of action will be. Now, considering the fact that price action is sitting above the structures I mentioned earlier, that is the ascending trend line, the demand zone, if we are going to be selling, I would like to see a strong or a significant confirmation before joining a bearish move. And what I want to be looking out for here to sell the US All Spot this morning is for price to break down the support line. Not only breaking down the support line, remember price, even at the breakdown of the support line, price is still sitting above the ascending trend line we identified on the daily time frame. And you know how we use our ascending trend line, we only look out for buying opportunities if price remains above that structure. So what I will be looking out for to sell here is price giving me a retest of structure, which will further confirm that truly sellers are getting stronger. So I would like to see price come back to retest the $80.60 level, or it may even go to as far as our key level at the $81 area. Now if price comes into any of the structure following the breakdown of the $80.60 level, and we see continued selling pressure on, let's say, the 15 minutes time frame, then we can finally join the downtrend move. And of course, I will be giving us updates on multiple levels that we will be using to maximize the bearish move if price action continues to nosedive. So that is how we are going to be selling the US All Spot for today. Now, in as much as we are looking out for selling opportunities, you know how we do it in this community. We also want to be on standby for buying opportunities as well. Now, what are the conditions that we are going to see on this chart that will make us feel comfortable buying and of course negating the idea of selling? Well, first of all, if you look at the range bound structure we identified here, technically, based on the way we approach our range bound structure, I do have a buy stop order sitting above the $81.80 level, and look at how the $81.80 level shares a beautiful confluence with the support line of that flag pattern we identified on the 4 hours time frame. Now, if price action can break out both of the structure, this will give me a signal that price is back within the buyer's territory, and of course price is still sitting above the demand zone to welcome more opportunities to buy. And if price goes on to break out of the $82.50 level, we definitely want to be adding more buy positions to our existing trade. Now, there is a caveat to this whole bullish setup here, which for me, I still think that we can join a buying opportunity even before the breakout of the structures happen. Now, remember, we have our key level at the $81 area, and you know how we use our key level. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. And considering the fact that this key level is sitting above that demand zone we identified on the 4 hours time frame, I would like to see if the market will climb back above that key level. Now, if it climbs above the key level, a retest of this structure will be all I need to join an uptrend move, after which I will now be looking out for more opportunities to buy the US All Spot. Now, buying above the $81 area should be having our stop losses somewhere right below the support line for this week, which is at the $80.60 level, dovetailing to about 40 to 50 pips thereabout, depending on where your entry is. So this is my simple view on the US All Spot this morning, as our center of focus today is going to be around the $81 level and the $80.60 area, where depending on the direction of the breakout will determine where our next line of action will be. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us updates as at when due. So if you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. So stay tuned in, guys, and you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. Stay tuned in. Hello, Michael Molwa. Good morning to you. This is the first time I'm hearing that name in the comment section. Trust you are doing very well. Good morning to you, and glad to have you around with us this morning. So Michael is asking here that how do we go about multi-time frame analysis, and do we trade retracements of, say, the 4 hours, 4 hour trends? Okay, I guess I understand what you're trying to say there, but let me say this. First of all, it's always important that we remain dynamic when we approach the financial market. This market is an uncertain environment, and for us to be dynamic, we need to understand the fundamentals that is driving the sentiment in the market, which is very, very important. So we want to take into consideration the economic event, geopolitical tensions in the Middle East. This is the fire that drive the sentiment in the market. That's the first thing we want to take note of, which is very, very key. After which, we want to interpret the charts and see how it is in alignment with what is driving the sentiment in the market. Now, to answer your question, I would advise you to watch my previous videos to see how I do this. So the links are right in the description box below of my recent top-down analysis on the asset we are going to be looking at for this week. I have the GBPUSD and the XAUUSD right in the description box below. So please check it out and see how we analyze and do top-down analysis on our assets. I think that will give you an insight into what we do and help you to understand our analytical approach. All right, Michael Moa, good morning to you once again. Okay, I can see your comment here. C40, good morning to you. C40, how are you doing today? Trust you're doing very well. You say that my broker don't have that exact symbol. Okay, USOILSPOT. All right. So, well, I'm surprised that your broker don't have USOILSPOT. USOILSPOT is one of the most traded commodities in the world. But if that is the case, then probably if you really want to trade the USOILSPOT, then I'll suggest that you look for some other broker. So I have a personal broker which I use. The links are right in the description box below. XNES. If you use my referral link, you stand to enjoy some benefit from the broker if you use my link. So you can check the comment section, sorry, the description box below. You will see the link that will take you to open an account with XNES. All right, so okay, yes, okay, that's true. It could be WT high, it's the same thing too as well. It's the same asset. WT high, USOILSPOT, and Brent oil, they are all the same. So if your broker has WT high, very good and fine, it's the same. Just look at the price level. Is it the same with what we have on the chart? If it is, then you are good and fine. All right, I hope I answered your question, C40. All right, so in the absence of no further questions, I'm of the opinion that we are all on the same page. So in that regard, let's move on to the next financial asset on our watch list. And please do not forget to give the video a thumbs up if you have found this content helpful and useful in making your independent trading decisions. Kindly give the video a thumbs up, and thank you very much as you do so. All right, you're welcome, C40. So moving on to the next asset on our watch list. Stay tuned. So the next financial instrument we are going to be looking at this morning is going to be the GBPUSD. So we'll have no other choice than to revisit the GBPUSD. So we had some couple of comments during our sessions last week where we had some people amongst us asking that we attend to the Euro USD. So what I did, because of my limited time, I cannot trade more than 3 financial assets during the Forex Morning Mastery. So what I did now was to share a poll on my Telegram platform as to, let's see if what everyone wants us to look at. So I shared the poll showcasing the GBPUSD, the USD JPY, and the Euro USD, and the result came out in favor of the GBPUSD, as we had 61% in favor of the GBPUSD as against 34% for the Euro USD and 23% for the USD JPY. So the majority carries the day, and that is why we are going to be taking the GBPUSD. So I'm sorry for the Euro USD fan. I'm sorry. Please, let's take this like that. So now on the GBPUSD, we have quite an interesting setup going on the chart right now. And of course, since in the last 2 weeks, we've seen our price action dropped significantly against the pound sterling, especially after the US CPI data, which can be seen right here. Now, before I go any further, I want to reiterate that I did a video on the GBPUSD where I did a top-down analysis on this asset. So if you missed out on that video, please check the link right in the description box below to have a background knowledge of how we got to this particular point. So on the Forex Morning Mastery, we are only going to be deliberating on the 1 hour time frame, which is our execution time frame. So 2 weeks ago, we saw the CPI data come in. As we see, after price tested at 1.270 area, the CPI data came in higher than expected, which further emphasized the sticky and hot inflation in the United States. And this has incited this strong bearish move in favor of the US dollar, which transitioned into what was looking like a bearish rectangle pattern. As you will see, price action was confined within a range bound structure throughout last week trading session, and for this bearish rectangular pattern to be validated, we need price action to break down the support line, which actually happened during the last trading day of last week to incite a bearish signal for us. Now, with the current situation here, what are the chances that the pound sterling will continue to the downside, or are there any possibilities that price could rise back up again? However, if we look at the what is going on in the United States, remember that we have high inflation and the economy has been very resilient, which has further elevated the US dollar. The US Treasury bond yield has been doing very well, and we know how interrelated this the US Treasury bond yield is with the US dollar. And the speculation of a more aggressive policy in the United States is on the radar right now. All the Fed official who spoke last week has been giving hawkish remarks as regards to the inflation in the United States. So everyone is in support of the idea of higher interest rate for an extended period of time. Now, what does this simply mean? The higher the interest rate, the more favorable it is for the US dollar, as investors, due to the high interest rate, will want to move their capital and invest in the US dollar. Now, the path of least resistance for the US dollar is looking very positive at this point, which if we look at the GBPUSD chart, the path of least resistance seems to be to the downside. Now, if we go to the other side of the pond, that is the United Kingdom, there is a strong clamor for easing monetary policy at this point in time. Though report that came in last week showed that inflation is still doing a little bit, giving signs that it's gradually reducing. But one thing is, the high borrowing cost in the United Kingdom has been affecting the economy badly. We've seen loss of job, high unemployment rate. We also have the housing sector is not doing well, as people are no longer purchasing houses due to the high borrowing costs and the like. So it's really affecting the United Kingdom economy, and as a result of this, there is a clamor for easing monetary policy. So we might likely see a situation where interest rate may be reduced to support the economy. But I'm not sure what will happen. Well, it depends on what the Bank of England officials will be saying during the course of the week. So for now, we are going to be, in the absence of no market moving data releases from the United States and the United Kingdom today, we are going to, the US price dynamics is going to be the major factor that will be driving the sentiment in the market today. And for me, I think the path of least resistance is looking very bearish. Now, if we look at things from a technical standpoint, this is what we have here. Price has already broken down the support line of that range bound structure last week Friday, which for me is serving as my key level for this week. Now, the question in my video, if you watch my video on the GBPUSD, is that will price action come back to retest the level that was broken last week in an attempt to continue the downtrend, or are we going to be seeing a bearish continuation pattern at the beginning of the week to incite a sell-off to the downside from here? Now, looking at how market participants has been reacting to the structure since the beginning of the week, you will see that the last 10 to 12 hours has seen price action confined within the 1.23925 and the 1.23670 area to emphasize the prevailing uncertainty in this market at this point. And you know how we use our range bound structure. Whenever we identify them on our chart, we exercise patience, waiting for the market to make a final decision, which will either come in the form of a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, look, considering the fact that the path of least resistance is looking bearish, let's first of all talk about the possibilities the sellers have in this market. Now, since we have the support line for this week around the 1.23670 area, a breakdown of the structure will be all we need to join a bearish continuation. So if we are going to be selling below the structure, we have in our stop loss right above the previous the resistance line, which will be dovetailing to about 25 pips thereabout, and then we join the move to the downside. So that is what we will be looking at for selling the GBP USD for today. However, if price action does the contrary and it breaks out of the 1.23925, due to the fact that we are within a bearish trend, I would like to see a confirmation happen, like a retest of the structure, before jumping into the buy position. Now, if we join the buy position after the confirmation happens, I'm advising us all to move our stop losses and secure the buy position as soon as price comes close into the 1.24200 area, which doubles as our key level for the week, and of course the support line of the bearish rectangle pattern we identified in our recent video. Now, the reason why I have said that we will be moving our stop losses to secure this position is simply because the buy position we will be taking at the breakout retest of the 1.23925 is considered to be a counter trend move, where the possibility of a trend continuation to the downside could happen around this area if we see any form of reversal pattern, maybe in the form of a double top structure, head and shoulder pattern, or a rising wedge around the 1.24200 area. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So in the meantime, before that happens, let's maintain our center of focus around, or within, let me use that word, the 1.23925 and the 1.23670 area, where depending on the direction of the breakout will be guiding our decisions for today. So for me, I already have a sell position triggered at the breakdown of the 1.23670. Let's see if this bearish move is going to work for us today. So this is my simple move, my simple setup here on the GBP USD. If you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list. And you can as well take that time to mark out those levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right. So, in the absence of no questions, I want to assume that we are all on the same page, and all I have said so far has been comprehensive enough for us to adopt. And please, if you have found this content helpful, kindly give the video a thumbs up. Your likes are very much valuable to me, and it also helps the algorithm to promote the video to a wider audience who may find this content beneficial to them too. And your likes is one way, or let me say the cheapest way you can actually support this community to grow. And thank you very much. As you do so, let's make the like tally with the number of people on board. And for those who already clicked on the like, thank you very much. I really appreciate your support. So with that being said, here we shall be moving right into the final assets on our watch list for today. So the final asset we are going to be looking at this morning is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, the new week has started with a strong bearish move. As you will see, price started at around the $2,388 level and has since dropped significantly, breaking down both the ascending trend line we identified during our weekend video and of course the key level that we identified around the 2,365 area. Now, before I go further, I want to emphasize that we are only going to be deliberating on the 1 hour time frame, which happens to be our execution time frame. So during the weekend, I have already done a top-down analysis on this asset. So if you missed out on that video, please kindly go ahead and watch that video so you can have a better understanding into how we got to this point. And that video as well can serve as an educational tool in understanding the utilization of price action. So the links are right in the description box of this current video. You can go ahead and check it out after the live session. So we have seen price action drop significantly as at this morning, and for me, I can attribute this to the optimism in the market amidst the hopes of a de-escalation of conflict between Iran and Israel. Now, the geopolitical tension in the Middle East has been one of the major factors that has been driving the ascent of price action on the gold. And remember, a couple of weeks ago, I also mentioned how some countries have been growing their gold reserve. Countries like Kazakhstan, India, China, and most of the Euro-Asian countries have been buying the gold, increasing their gold reserve. Now, this has escalated prices of gold. Now, with the de-escalation of conflict in Iran, I'm of the opinion that major participants in the major key players in the market who have taken advantage of the rise of the price of gold may at some point want to start doing some profit-taking activities. That is, they want to take some profit off the chart, which is going to be reflecting on the chart as a retracement move to the downside. Now remember that we are within uncharted territory. Price action is within an all-time high area, and the fear that price may crash may be one of the major factors that could push price to the downside. Then another thing that could also incite bearish move at this point is the bullish sentiment surrounding the US dollar. The US dollar is gaining traction lately, which is fueled by expectations that of a hawkish sentiment from the Federal Reserve. And like I said earlier, all the speeches from the Federal Reserve officials throughout last week has been supporting the idea of a higher interest rate for an extended period of time due to the sticky inflation and the resilient US economy at this point. So for me, we cannot ignore the potential that sellers could come in at any point in time. However, the chances that price could still continue to the upside is still there. We are still within an uptrend scenario, so we need to strike a balance within this amidst this whole market dynamics. And the only way we can do that is to understand how market participants are reacting or behaving towards the recent development in the global market. Now, if we are going to try to understand this, we will need our technical structures. Now, if you remember, for those of you who watch my weekend videos on the XAUUSD, remember that we identified this ascending trend line on our 4 hours time frame, which obviously has been supporting the ascent of the gold prices. Now this morning we've seen price action break down this ascending trend line, and this fit here is the first time price will be breaking down this ascending trend line in the last 7 to 8 weeks, which is for me a very strong signal that we will not ignore. Now, from a technical standpoint, when price action breaks down an ascending trend line like this, we expect at some point in time price action may come back to retest the structure that was broken in an attempt to continue the downtrend move. Now, another thing I would like you to take note of is that before the breakdown of the ascending trend line, you will see that price action has been finding lower highs. Now, this is the highest point around the $2,415 area, and the next attempt by buyers to break out of the previous high was negated. As you will see, price action, sellers negated that attempt around that psychological level at the 2,400, giving us a lower high, which is a signal that sellers are gradually gaining momentum behind the scenes. And with this move breaking down that ascending trend line, I'm already tilting towards a bearish bias in this particular market. So what I'm looking out for today is to see how the market will react in the next couple of hours. Are we going to see price action come back to retest the ascending trend line, where the appearance of continued selling pressure showing us that buyers are finding it difficult to climb back above the ascending trend line will be all we need to join the bearish move to the downside. And if price does not go that far and instead comes back to retest our key level, well, a continued retest of that structure will also be a good idea for us to join the bearish move. So let's see how the market will play out. However, I have a sell stop order sitting below the structure. It's not all the time the market comes back to retest structure, so it could just go all the way down, breaking down the structure and pushing price further to the downside. So I have a sell stop order below the 2,350 area, but let's see if the market will come back to retest any of the structure before we consider any bearish move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. Now, in as much as we're looking out for bearish opportunity here, we should not ignore the possibilities that buyers could come in at any point in time. So we do want to be on standby to capitalize on bullish opportunity too whenever the market presents it. And the only condition that will make us buy the XAUUSD today is for price action to climb back above that ascending trend line. Then we will know that the breakdown of the ascending trend line here may have been a false breakdown. So for us to buy this asset, I would like to see price climb back above the ascending trend line, breaking out of the 2,388 and a retest of structure with continued buy pressure, giving us signs that sellers cannot break down the ascending trend line anymore before we jump into a bullish move. So let's see how this will play out today. We need to exercise patience as we are within a crucial juncture in this particular market. And for those of you who are going to be part of the XAUUSD live window during the New York session today, well, we are going to be there together to monitor real-time price action on the XAUUSD and see how we position ourselves for the next move. Now, for those of you who do not know, we normally run a XAUUSD live window where we monitor real-time price action on the XAUUSD during the New York session. It usually kickstarts about 5 to 10 minutes into the New York session. Immediately after the end of the session, you will be seeing the link to the XAUUSD live window. Click on that link, click on the notify me button, and you will get notified as soon as we come on live. So this is my perspective on the XAUUSD for today. Very simple setup. All we need to do is exercise patience and let's wait for this structure to mature. It could take about 3 to 4 hours, so patience is required. And as soon as something new comes up, trust me, I will give you updates on both my TradingView and Telegram platform. While I wait for your questions, if in case you have any inquiries or you need some further clarifications, we still have 5 likes here and we have over 13 people on board. Please, if you have found this content helpful and useful in making your decisions today, why not give the video a thumbs up? Is the cheapest thing you can do to support this channel. Let's make the like tally with the number of people on board, and thank you very much as you do so. And for those who are click on the like button, you guys are wonderful. Thank you very much. So let's wait and see if there are any questions before we start rounding off on our trading, our session today. And while we wait, you can use that time to mark out these levels accordingly on your charts, as you will be needing them as a reference point to guide your trading decisions today. Stay tuned in, guys.